What's going on, everyone? Today, 58% of the S&P 500 closed down in the red today, and the market was continuing its ascent for most of the day until it started drilling to the downside out of nowhere 10 minutes before close. In today's video, we're going to be dissecting this recent price action and news, covering today's key earnings from Apple and Amazon, as well as looking at historical data that shows what the market normally does next in situations like we're in now. We only have one more day left of the week, so let's make it a good one.
Yeah, definitely, Mike. The S&P 500 had a pretty crazy day today, actually moving up, and whenever the market opened, we went on a great run up to around 564 on the SPY, and I know last night everybody was super bullish and excited as those earnings between Meta and Microsoft were amazing, but as we know, Apple and Amazon reported tonight, and there was a lot more worry with these two companies, especially with all the tariff situations going on. Looking at Apple first, they're definitely down in after hours. They just fell back below 210, and they're kind of pushing towards like 205 even, and maybe even $200 here, which might come into play. But looking at their numbers overall, I thought it was pretty good, Mike. You know, they beat on EPS, they beat on revenue. I will say it wasn't by a ton, like they didn't really wow. iPhone revenue beat, Mac and iPad revenue also came in pretty solid there, as did many others. I saw a lot of people looking at their services revenue, maybe blaming that for some of the downside here. And of course, whenever there's tariffs, everybody's like, okay, well, what did they talk about when it comes to the tariff situation? And I thought it was pretty cool to see that they actually make over half of their iPhones for the US in India. And of course, they might be ramping up production there even more.
Yeah, so it's definitely good to get an update just from Apple's side of things with this whole tariff trade war situation. Some other news that was definitely worth noting is that they authorized $100 billion in buybacks as well, which will definitely help boost up that share price. But as we can see in after hours right now, it seems like these earnings weren't good enough for Wall Street. Apple is selling off pretty hard right now, Tom. We still are above that key $200 support level and psychological level, but looking at this one for tomorrow, you know, as we know, Apple is a very high market impact company. What are you seeing in terms of the charts, and what should we look out for?
Over the past week, there's been a pretty good recent low, right around $207. I'm definitely going to have that on watch. It's actually almost pushing it as I'm speaking, so we might see a breakdown of that. Below there, I definitely like 205 and 204. There's been a lot of reaction there on the way down, so I will be watching that as well. But of course, like you mentioned, 200 is pretty huge, but with the way that Apple's been moving over the past few weeks, if we do start to see a pretty solid pullback, we could even get a move below 200, like towards maybe 195, and then maybe even this recent peak down around $190 as well. But there's a lot of levels with Apple in the short term. I am pretty sad to see it, though, rejecting at this resistance. It's a pretty bad sign with earnings, especially following Microsoft, Google, and Meta's positive earnings moves.
Exactly. So this definitely is a tough rejection here, but that is how the market is sometimes, and it just has to be adapted to. I definitely am a little bit skeptical of Apple in the short term as of right now, but as always, let's keep a close eye on it and adapt with it as it continues to move. But Tom, Amazon's earnings didn't have the best reaction either, so what is going on here?
Yeah, I think it's a very similar situation, actually, where, you know, they had a decent report, but at the end of the day, the numbers just didn't really wow investors. We can see that their EPS beat by quite a bit. Their revenue was up a little bit as well. Again, not a ton. AWS actually missed, though, very slightly, and AWS is a major part of Amazon's business. So for them to miss there a little bit, obviously, is a fairly big negative for them, and something that you definitely do not want to see. And they also had some pretty weak second quarter guidance as well, which I think was spurring a lot of the selling pressure.
Yeah, that's what a lot of people were attributing the sell-off to. Looking at this more specifically, they're expecting their second quarter operating income to be between like 13 and 17.5 billion, and everyone was expecting this to come in around like 17.6 billion. So that was a little bit of a letdown, but either way, we definitely are seeing some decent selling pressure in after hours with this one. Looking at the charts here, what are the key levels to watch, and do you think there could be any potential plays with this tomorrow if we do see a breakout?
You know, I actually do like the way that it's moving down towards this key support around $180. Now, I will say it has gotten just under that a little bit towards like 178. So if you wanted to be really safe, you could wait for like a $178 breakdown. But if we do see a solid breakdown below here, I would not be surprised if it started coming back to test its recent low on this peak around 165. That would be a pretty big level to watch for as it starts to pull back. Now, if it does make a miraculous recovery, there's a huge resistance around 192 and 194 where we saw those rejections in after hours tonight. So definitely keep those levels in mind, Mike. I would say in the worst case scenario, tomorrow, Amazon just opens up and chops around, right? If it just chops around down here, it's going to be pretty hard to play, in my opinion.
I agree. And with this selling that we're seeing right now, it's not like we're seeing everyone rush to the exit all at once. It seems like it's more so of a just major rejection off resistance because like we covered, their earnings were pretty good. And you could say the same thing with Apple. It's just the earnings weren't good enough. and that's where the problem comes into play. So with these stocks tomorrow, understand that we are seeing some bleeding here, but it's not like as crazy as some of the selling that we saw earlier in the month. So keep that in mind. And then looking at the earnings lineup for today, we can see that there were a handful of companies that did report, like Airbnb and Reddit as well. We'll do a quick deep dive on Reddit just briefly in a second, but also keep a close eye on Fubo and ExxonMobil tomorrow as they report earnings before the bell. Looking at Reddit and after hours though, they are crushing it. Basically, they gave some great guidance. They beat on profit and revenue, and their daily active unique users jumped 31% year over year. So this is one big winner on the earnings front today.
It definitely is, and with it running up so much in after hours, it's getting up towards a big resistance. I noticed it's slowing down a lot around 140 and 142, so that's definitely going to be on the radar tomorrow. Maybe we could see a good earnings continuation here. I know everybody likes to look at the big players out there like Microsoft, Amazon, Apple, those bigger names, but I will say the smaller growth stocks have been having some great price action in the short term.
Love it. All right, Tom. So as we look at the market right now, it has been doing very well over the past week, but we do have some historical data kind of alluding to a potential pullback here soon. What does the data look like and what is going on?
Yeah, so if the S&P 500 has 8 green days in a row while being under its 200-day moving average, we generally do see some pullbacks in the subsequent trading days following this. And there's been quite a bit of data on this. I will say a lot of the data is kind of old. There's nothing really newer than 1981, so I guess take it with a little grain of salt here. But at the end of the day, it's coming from 1927. But as we can see, like on the 1 day, 2 days, even the 3 day later categories, the percentage of the time the market is green is very bad. 38% on day 1, 0% on day 2. That's a pretty bad number there. So don't be surprised if we see a little pullback in the market, and I'm sure that the earnings tonight is not going to help it at all.
And it's not like this data is like that crazy surprising either, because when the market has popped up for 8 days in a row, and then when you also add in the 2025 craziness effect where we still have the trade war going on, and there are still a lot of risks in the market and the economy right now, it's not unreasonable to expect a pullback after so much buying and positivity. And one other thing that I definitely took away from that data that we showed is that when we see these pullbacks, it's not like we're seeing like 3% red days. Like it's more so just like a, generally speaking, like lighter pullback, which is good.
Yeah, definitely. It's not like anything too crazy, so it might just be more of like consolidation than anything else. And I know we do also have some data looking at some May positivity here, which is good, so kind of goes against that. But keep in mind, they're talking about for the entire month of May. For post-election years, May is historically pretty strong. As we can see, a majority of the time, it has been one of the stronger months on average. Pretty much July is the only other one that beats it, along with April. But very nice movement here in May on these post-election years. Now, keep in mind, this post-election year, though, might be a little bit different than most.
No doubt. And I think the key takeaway is that it's not unreasonable to expect a little bit of a pullback or chop in the short term, but there is a lot of data, not only this data, but a lot of the other data points that we showed over recent weeks that does point to a strong rest of the month and next few weeks, to say the least. So that is good, and it is something just to be aware of heading into the market in the short term. But Tom, there was some crazy news today with Tesla. I'm sure a lot of our viewers already know this, but here's a big warning to be careful what you see out there. So Tom, we could just see by looking at Tesla's chart, it has been all over the place. What is the news driving this craziness?
Yeah, it's pretty insane, and there's some more fake news coming out. I feel like there's been so much fake news in the short term, it's hard to trust these media sources. It even prompted Tesla to make a late-night X post calling out the Wall Street Journal, essentially saying that their post is absolutely false, and they even communicated to the media before the report was published. So I don't know what's going on with the Wall Street Journal here, but I wanted to show the Tesla X post so that there was no confusion, because the next post I'm showing is the fake one. So we can see that the Wall Street Journal put out that Tesla's board opened up a search for a CEO to succeed Elon Musk, as in pretty much saying that, hey, Elon, you haven't been paying very good attention to Tesla. Tesla's stock is down. We might be replacing you. And at the end of the day, Tesla ended up coming out and saying that this was not true. But I think that there's some skepticism here. Like what's going on, right? Does Tesla, are they actually doing this in the background? Like, how did Wall Street Journal even get this to report it? And at the same time, how did they tell the media that it was false before it even happened? Like, did they come and ask it? It's kind of a funny situation here.
Yeah, so Tesla has been all over the place in the short term. The stock isn't like moving like too crazy much like right now, as it only fell by like 0.5% today. But I guess this is just a nice reminder to be careful what you see online, especially as it comes to some of these recent breaking news headlines. Because like Tom said, there have been a handful of times this year already where, we have like this big breaking headline and it'll have a real impact on the stock market. And then you'll learn later that it was completely fake or just the information was wrong. So that take that how you want as a quick little warning for the rest of 2025. But Tom, there was also some pretty crazy price action with ticker symbol LLY today, as they had some pretty big but also pretty bad news related to some of their weight loss, I guess you could say potential product sales. What is going on here?
Yeah, definitely, Mike. And we can see that from their pre-market move at that peak to the bottom here at the end of the day today, they fell down by around 13.8% and closed down 11%. So quite the move. This is definitely very impactful on LLY in the short term, but they are getting beat out by Novo Nordisk.
Analysts maintain bullish buy ratings on Meta platforms, Meta, due to strong financial performance, strategic initiatives, and positive insider sentiment. The company's growth in earnings, revenue, and user engagement, particularly with its Reels feature, supports a revised target price of $608. CMB International Securities also set a target of $760, highlighting confidence in Meta's future growth driven by AI investments and metaverse development. Apple Inc. navigates tariff uncertainties while reporting strong earnings. CEO Tim Cook remains confident, announcing a $100 billion buyback and production shifts to India. Analysts maintain positive outlooks despite challenges in the services division. Rumors about Elon Musk's potential replacement as CEO led to market uncertainty, causing Tesla shares to drop 0.58% on Thursday. Analysts believe Musk will remain CEO for at least 5 more years, but concerns linger about leadership changes impacting stock value significantly.